How do you compare economies through time? Recall that we add up all the goods and services in the economy by multiplying them by their price. So as each year rolls along, the quantity is going to change. We're going to call this real economic growth, but the price is also going to change. We call this inflation. Nominal GDP is going to measure it in today's prices, whereas real GDP is going to measure it in constant prices. We want to isolate just the quantity growth and keep any price changes flat. Let's do this with an example. We live in a fruit economy. We only produce peaches and cantaloupe. Here we have 2 years, along with their price and quantity pairs. Calculating GDP in 2023 means we need the quantity of peaches produced that year, 2 million, multiplied by their dollar price. We produced 500,000 cantaloupes, and the market price was $4 each. The total dollars spent on peaches is 3 million, and the total dollars spent on cantaloupe is 2 million. Add those up, and we get a nominal GDP in 2023 of $5 million. Well, let's calculate the nominal GDP the next year. We saw some economic growth. We grow more peaches than we used to, but we have some inflation because the price is a little higher. More cantaloupe, but slightly more expensive. The nominal GDP in 2024 grew to 5.676 million. Let's put this in a growth rate. A reminder that the formula for a growth rate or percentage change, in this case it's the Greek capital letter delta or the triangle, is equal to new minus old divided by old, and then to get it into percentage units you need to multiply it by 100. So this is 5.676 minus 5 all divided by 5 multiplied by 100. 13.52%. Now, this growth rate in the nominal GDP is going to be equal to the inflation rate plus the real economic growth rate. So, in order to isolate these two, we want to keep the same price between both years. The question is, what's the best price to do it? Should we use the 2023 price or should we use the 2024 price? Well, in this case, we're going to compromise. We're just going to use the average price between the 2 years. So, the average price of peaches is $1.50 plus $1.70. Divide by 2 over the 2 years, and we get $1.60. I mean, it's the halfway point between two, right? Likewise, the half point for the cantaloupe price is $4.02. Let's calculate the real GDP in both years. Quantities, 2 million times the average price. Add that to the 500,000 cantaloupes with the average price of cantaloupes. Do the math, and the real GDP in 2023 is $5.2125 million. A lot of decimals in this one. Let's calculate real GDP the next year. We have more peaches, using the same price, and more cantaloupe, again using the same average cantaloupe price. This yields a real GDP of 5.453 million. Let's get that growth rate. The new minus the old, divided by the old, multiplied by 100. The real GDP growth is equal to 4.61%. That's a lot lower than our 13.5% growth rate for nominal GDP. And from those two numbers, we can calculate the inflation rate. The nominal growth is equal to the real growth plus inflation. This was 13.52. The real was 4.61. OneNote can do the math for us. 4.61 equals spacebar an inflation rate of 8.91%. That's quite a bit of inflation. On the other hand, that's also quite a bit of real economic growth. Let's look at some real world data. This is real gross domestic product going back to 1947. We can see a long run pattern of growth for the United States economy. The units here are billions of chained 2012 dollars, seasonally adjusted annual rate. We seasonally adjust things so that the effects of summer vacation or Christmas spending don't show up in the data, and it's adjusted for inflation using the dollars from 2012. So in 1947, the economy was around $2 trillion, and today it's over $20 trillion, again using those 2012 units. The gray bars represent recessions. You can see a very small decline during the dot-com bubble, a more significant drop during the Great Financial Crisis, and of course, the very dramatic COVID experience. For fun, let's compare this to nominal GDP. So today, in 2023 dollars, the GDP is 26.7 trillion. And if we go back to 1947 dollars, they would have measured the economy at 243 billion, not 2 trillion. But that difference there is just a change in inflation, not a change in productive capacity. A lot of times we like to present this in growth rates. So here the vertical axis is percentage change from a year ago. We can see the blue line is always higher because the blue line is representing nominal GDP. It's going to include inflation. In fact, that gap between the blue and the red is the inflation rate. We can see at the beginning of 2022, the nominal GDP was growing at 10.8%, whereas the real GDP was growing at 3.6%. And the difference between them of 7.2% was the inflation rate during the period. Let's just look at the growth rate of real GDP. On average, between 1947 and today, the economy has grown at 3.1%. Some of this is reflecting increases in productivity. The other portion is reflecting the increases in the total size of the labor force, population growth. We can see it bounces around quite a bit, shrinking during recessions. In the Great Financial Crisis, the economy shrunk by 4%, but again, very dramatically, during COVID, the economy shrunk by 8%. However, it recovered spectacularly. A 12% growth rate was witnessed in the second quarter of 2021. We saw that once in 1950 at 13%, but in the post-war era, we never saw anything shrink by 8%. These recessions in 1954 were around minus 2 to 3%. Same with the early 80s. Now you can see why during the time the Great Financial Crisis was so serious. And I think the main difference between then and today is the economy recovered very fast during COVID, but it recovered relatively slowly after 2008. But there's another interesting pattern here. Notice the annual growth rates are a little higher pre-1970s than they have been today. So we can break up these averages. The pre-1975 average was 3.8%. Whereas post-1975, represented in the green dotted line, is 2.7%. There's a lot of hypotheses for this. One, just the technical progress has not been as disruptive. In the 1950s, we invented intercontinental flight. Interstate highway was built for the first time. I mean, you can't build two of them. All the advances in modern chemistry were coming to maturity during this period. The speed of transportation peaked in the 1950s and 60s. And while in the 90s we had the invention of the internet and the proliferation of personal computing, it didn't affect productivity at the same degree as the previous inventions did. Well, in the 2000s, we invented social media and the smartphone. For better or for worse. The last point I want to make is these subtle differences in growth rates matter. And there's a neat little trick to demonstrate this. We call it the rule of 70. It tells us how quickly something will double. Here's the formula. The doubling period is simply equal to 70 divided by the growth rate. Let's say GDP is growing at 3% per year. How quickly is it going to double? 70 divided by 3 every 23 years. A little over a generation. What if real GDP is growing at 1.9%? How quickly will it double? Now it's every 36 years. That's a substantial difference. Take China. China used to grow at 10% a year. That means they were doubling. The entire productive capacity of the economy was doubling every 7 years. That's just enough time for adolescence. And now your economy is twice as big. It's nuts. It's nuts. It's crazy. Today, they're not doing that. It's closer to maybe 4.5%. And now they're doubling every 15 years. Still very fast. Definitely catching up with the US, but not what it used to be. This graph compares the real annual growth rate of China versus the US, and we can see the blue line representing China is relatively higher than the American line. Zooming into the past 20 years, there's China's 10% growth rate, whereas the US was experiencing around a 3% growth rate in 2006. But after 2010, China's growth rate fell to where by 2019 it is just slightly higher than the US. There continue to be many questions and speculations for how long it will be before China's economy overtakes the US to become the world's largest GDP. When do you think it will happen? Will it even happen at all? Only time will tell.